Good morning, and let's look at the top 5 stocks to watch out and trade today, starting with TCS. On the back of its earnings, it's surely going to be in focus today. The Q3 earnings have beat the street estimates, and it's the best growth that the company has seen in 9 years. Even the margins of the company that came in at 26.6%, the EBIT margins, which we look at normally, that has come in at 26.6%, and it's the highest in 5 years. So surely a very good set of numbers coming in from TCS. Surely indicates how other IT companies are going to be performing this week as well, and that's what we're going to watch out for as well. But today TCS is surely going to be in focus on the back of its earnings. Revenue in CC terms up by 4.1% on a quarter-on-quarter basis. Also, brokerage notes post the earnings like JP Morgan has maintained an overweight stance with a target price of 3,450 rupees per share. This is the raised target price for the which the mortgage firm has, brokerage firm has on TCS as well, and they've upgraded their revenue targets to 1%, 2% respectively for FY21, 22 and 23. Also, CLSA has maintained an outperformance stance on TCS as well, and they believe the order book is quite healthy, and further acceleration is obviously going to help TCS even more, and they have a very optimistic outlook on TCS as well. Now moving on to DMart, the company's Q3 numbers, retail space has done quite well. We are seeing an improvement overall in the business as well as the financial metrics of the company as well. Now let's look at the revenues. The revenues are up by 10.8% on a year-on-year basis. They've come in at 7,542 crores, while the profits of the company also seen a marked improvement. It's at up 16.4% and have come in at 447 crores. Margins of the company, EBITDA margins are up, have expanded by 30 basis points, coming in at 9.1%. Overall, the DMart stores also were at around 96% of December 19 sales versus December 20. 96% is what the sales were. So surely positive signs coming in for DMart as well. And we're going to keep an eye out on DMart and TCS both on the back of their numbers. Now let's shift focus to some of the brokerage notes that came in this morning. We do have Goldman Sachs on Maruti as well as HSBC on Maruti. So Maruti is going to be in focus today after Goldman Sachs has maintained a buy stance in the company with a target price of around 8,625 rupees per share. They believe the rise in car industry volumes by 2% to 2.5 million tons for FY21 is what they're expecting, and they believe that Maruti is going to lead this forecast and lead the growth as well. So they have upgraded Maruti Suzuki's volume to 8% for FY21 and 6% for FY22 and FY23 estimates. Now what does HSBC also is maintaining a buy stance on Maruti with a target price of 8,400 rupees per share. They believe that the FY22 outlook for Maruti is quite strong and promising, and it remains, the outlook is quite positive. They believe the PV demand is still robust, and they expect the current buoyancy to continue going forward as well. And still at the current volume forecast, also the margins are unlikely to catch up, but they're quite positive on the overall stance, especially the new product launches are an upside risk for Maruti Suzuki in the near term. So but we're going to keep an eye out on Maruti Suzuki. We do have Tata Steel next, which could be in focus after the Q3 update, where the exports have shrinked by 11% overall deliveries. But Tata Steel India's crude steel production remained quite strong. It came in at 4.6 million tons, which is up by 3% on a year-on-year basis. And also the company saw a strong sales momentum. However, the sales volume seemed a bit constrained by lower operating inventories post the very strong Q2 sales. So that is something a bit of concern. But all in all, we're going to keep an eye out on Tata Steel. Lastly, an ET Now news break. Vedanta will be in focus on the back of that after Vedanta Promoter Group has launched a voluntary open offer. The promoter group offer to buy 371.75 crore equity shares or 10% equity stake. So this news break was on 29 December by ET Now. It's finally confirmed. The voluntary offer price is at around 160 rupees per share, and post December stake hike, promoter stake currently stands at around 55%, and post this voluntary offer, the promoter group holding will surge to 65%. So these are the stocks that are in focus at 9:15 a.m. when the markets open.